Hi there, Lenny LaRocca with the LaRocca Real Estate Group with Vista Sotheby's International Realty. Thanks so much for coming back and watching my video blog. Today the topic will be tax advantages of home ownership. Again, today's topic is the most common tax deductions for a homeowner. The reason we decided to cover this topic today is we've helped a record number of new homeowners this year. And so we want to make sure that you're aware of what these tax deductions are. By all means, remember that please you should consult your tax preparer, your tax advisor before actually handling these on your annual tax returns. So the number one tax deduction as a homeowner is your mortgage interest. You can deduct the total amount of your interest paid every year against your taxes, a great benefit of home ownership. Number two, if you bought, or the year that you bought a home, say for instance this year, the cost of your loan or the points that you paid for that home loan are also 100% deductible against your current year tax return. That's the year that you actually bought that property. Number three, if you happen to have a home equity line of credit, let's say for instance a big strategy is that you took out an equity line home of credit to transfer maybe some credit card debt to get a lower interest rate, but you get to pay or deduct that interest rate that you paid against your home equity line of credit, which is a direct deduction against your tax return. You cannot deduct that if it's on your credit card. Let's say that you also take out a home equity line of credit to do a substantial improvement to your home. You do have the ability to deduct the interest again to those monies used against your home equity line of credit. Remember though, there are some limits on the deduction amounts in a home equity line of credit. Typically, a benchmark for couples are $100,000 combined if they file together and $50,000 if they file separately. And that's a lot of interest if you're actually writing that much interest off on your tax return. Finally, you can write off all of your property taxes, or otherwise referred to as real estate taxes. And those include both your state and your federal property taxes. That's 100% write-offable every year in your tax return. And finally, a few other notables that I won't go into details, something that you should pursue and seek some advice by your financial advisor would include a home office deduction. A home office deduction is deductible. The selling costs, if you happen to sell your property or in the year that you sell it, you can deduct the cost of selling that property. Number three, you have the capital gains exclusion. I think we covered that in a previous video, but remember, as a single property owner, you can deduct the first $250,000 of capital gains, and if you're a couple, you can deduct up to $500,000. Finally, moving costs. Let's say that you are being relocated with your employment, and at that point, some of that cost is deductible depending on what your relocation agreement is with your employer. And finally, there are some federal mortgage tax credits that are offered to primarily first-time home buyers, but those are specific to those loan programs. If you are a first-time home buyer and if you did buy with a federally funded or backed loan, you might want to check with your loan officer as to which of those costs are deductible. So again, thanks for watching my video today. We hope that you found this information informative. If you'd like some more information about the topics discussed, please go ahead and contact me. My contact information is below. And remember, until tomorrow, have a better day today than yesterday. Thanks for watching my video.